Hi, I'm Theoret, currency strategist at Scotiabank. I cover the G10 currencies, a category that encompasses the world's major reserve currencies as well as some of the developed economy commodity currencies. Some of the G10 are seen as safe havens and tend to strengthen in periods of financial market turbulence. Other currencies are vulnerable to volatility and tend to weaken quickly and sometimes dramatically in periods of risk aversion. We've seen some very turbulent financial market conditions over the past year or so, starting with the volatility shock from last January and carrying on intermittently through the spring and summer on the back of uncertainty related to Italy and some select emerging markets. We finished 2018 on a remarkably weak note with a lot of trade and Fed-driven volatility through most of Q4. Today, I'm going to walk you through the G10 currencies as it relates to their risk profiles and how they tend to behave in challenging market environments. One of the better known barometers that market participants use to gauge financial market volatility is called the VIX, which references the implied volatility for the S&P 500. Financial conditions are generally seen as calm when the VIX is below 15, and market participants don't usually get concerned until the VIX inches closer to 20. The VIX reached a high just below 90 at the height of the financial crisis in 2008 and has generally peaked around the 45 to 50 range in the post-crisis period. We can generally separate the G10 currencies along a spectrum, with safe haven currencies at one end of the spectrum and higher risk currencies at the other end. The Japanese yen, Swiss franc, and US dollar are all generally seen as safe havens. At the other end of the spectrum, you'll find the Norwegian krone, the Australian dollar, the New Zealand dollar, and the Canadian dollar. We've charted the correlation of these currencies to the VIX to give you a sense of how they behave relative to this gauge. The yen, franc, and US dollar have historically had a positive correlation to the VIX, strengthening in periods of financial market turbulence. The euro and the British pound are generally closer to the havens in most environments. However, we've also seen some clear dislocations in certain periods, and specifically through the European debt crisis as well as Brexit. A negative correlation between the VIX, the krone, the Aussie, Kiwi, and Loonie suggests that these growth-sensitive commodity currencies tend to weaken in periods of risk aversion. It's important to manage risk, but in times of volatility, it's equally important to step back and look at the historical ebbs and flows to make sure that you're avoiding the kind of panic that results in selling at the bottom or buying at the top. From the Canadian perspective, exporters and those looking to sell US dollars, periods of risk aversion can offer some great opportunities. For Canadian importers and consumers traveling abroad, it can sometimes pay to wait for markets to calm down and for volatility to moderate, given that these risk-off periods tend to be short-lived. From a longer-term perspective, we continue to feel that the Canadian dollar is undervalued, and we're bullish through 2019 and into the end of 2020. We're expecting a stronger Canadian dollar reaching 79 cents by the end of this year and 81 cents by the end of the next. You can find more thought-leading content from Scotiabank on our website, and you can also follow us on Twitter, as well as LinkedIn. I'm Theoret. Thanks for watching.